Right now, sitting inside your phone, there is $2.4 billion in interest-free cash, and a coffee company is quietly earning on every dollar of it. You already gave them the loan every time you tapped ad funds on that app. Nobody talks about this, not the financial press, not your bank, but the numbers tell a story that should change how you think about your wallet. So let's go through exactly what Starbucks built and why your savings account is paying for it. Starbucks customers currently hold $2.4 billion sitting idle inside the app. Let that settle for a second. That number is larger than the cash reserves held by most regional banks in California. Think about that. You worry about whether your bank is safe. Meanwhile, you handed a coffee chain more cash than most institutions hold. Over 40% of all Starbucks transactions in the US are paid using that preloaded balance. 40%. That is not a convenience feature. That is a funding mechanism. And it works because you loaded the money before you ever bought a single cup. A bank borrows your money and pays you interest. Starbucks borrows your money and gives you a digital star. One tiny data point on a server. That is the entire exchange, your cash for a star. Your cash leaves your account and sits inside their ecosystem, generating nothing for you. It funds their expansion, pays down their debt, and finances their investments, all at zero cost to them. If you have $30 sitting in your Starbucks app, that is $30 generating zero return for you. Meanwhile, it generates real capital for one of the wealthiest retail companies on earth. You overpaid, and you'll load it again next week. Now, if that number unsettled you, wait, because what happens to forgotten money makes the interest story look minor. Every year, millions of customers load small amounts onto the app and simply never spend them. Leftover balances of $1 here, $2 there. Pocket change that disappears into digital static. Starbucks calls this breakage. Analysts call it pure income. $181 million per year from money never redeemed. They sold nothing. They brewed nothing. The cash just evaporated from your account into theirs. That $181 million is not a rounding error. It is a deliberate feature of the system you opted into. The app is designed so you always load slightly more than you spend. The residual flows away from you. If your bank collapsed tomorrow, Federal Deposit Insurance would protect your money up to $250,000. That guarantee exists because banks are regulated financial institutions, required by law to maintain reserves and operate under government oversight. Starbucks holds none of those obligations. The company is legally classified as a retailer, not a financial institution. It faces no reserve requirements, no mandatory reporting, and no government backstop if the business fails. Your money inside that app is secured by exactly one thing: Starbucks' continued solvency. Nothing else. No federal protection, no regulatory audit trail, just a corporation's balance sheet between your funds and zero. During the 2008 crisis, Starbucks closed nearly 900 stores, but imagine if that pressure had hit harder. Millions of customers holding app balances with no legal protection and no recourse beyond bankruptcy courts. That scenario is not theoretical. It is the precise legal architecture governing your money right now. This is not an accident. It is a structural advantage, engineered over years to operate invisibly. It lives inside a product you associate with comfort and routine, by design. The loyalty program is not a reward for your loyalty. It is a cash transfer mechanism. Every time you see a sale on bonus stars, you are looking at an incentive to deposit faster. Every time you are 5 stars from a free drink, that is a nudge to keep money trapped longer. The convenience is real, the cost is hidden, and you have been absorbing it every single time. Open your app right now, look at your balance. Is that money working for you or for them? The companies that understand money best are not always the ones called banks. Sometimes they're the ones selling you a latte while running the most elegant zero-cost funding operation in history.